All right, guys, I've been looking for a reaction to GameStop's earning report everywhere. I'm just going to give you mine, and I'll read off a whole checklist of what they're doing moving forward. But let's go ahead and hear what the analysts have to say about it. I won't show you the clip. I'll let you hear it, though.
For why the stock is up a third of 1%.
Right.
I'm looking at GameStop, and as usual, there's not a whole lot to work with here, but we can tell you that third quarter adjusted EPS came in at 4 cents a share. Net sales did seem to miss analyst estimates as well. And in terms of hardware and accessory sales, that fell 28%. There aren't really estimates to compare it to. There are two estimates, really, and that did miss analyst estimates. The stock up about 2/3 of 1%, but when has the stock really ever moved on earnings?
Yeah, that's a great point. I'm taking a look at
And that's all they had to say. That was it. One, they didn't compare GameStop to itself. Unfortunately, if you compare GameStop to itself, from quarter two to quarter three, they had an increase of $60 million on top line. Top line revenue is increasing, guys. It's going up. To give you an example of 2023, GameStop had quarter two. They actually had more sales in quarter three than quarter two last year. Now they did the opposite this year. And here you go, an increase, right, from $798 million all the way up to $860 million. Hey, no ads, no cuts. We're going to talk about it. And as we show it to you, just know the chart, yes, it did go up. It did come back down. It's currently sitting at $27.75 on GameStop. Had a hell of a run right after the announcement. But you know what? I think it can go up even after the fact. But I want to talk about something that I have a list over here on the back side. I'll just read it to you. I don't have to show it per se. But right here, the bullish interpretation of the GameStop earnings results are this. The return to profitability. Yes, they returned to profitability. They reported a net income of $17.4 million. It's a really good number considering the $50 or so million they made off of investments. That cash, remember all the cash they have, it's generating a profit every quarter. So let the business do what they do. Let them tighten up the strings. Let them, cut where they have to and find the margins where they have to. But right now, a significant turnaround from a $3.1 million loss last year, this same very quarter. So $20 million swing. And this shows the company's efforts to streamline operations and focus on profitability are paying off. Cost discipline, selling and SG&A. Expenses were reduced to $282. We know that it was originally $310. If you take away the commitment to Immutable X and then their actual downgrade from $296.5 all the way down to $282, tells you they cut around $14 million, $14.5 million, which is awesome considering it's a transitional period. Them shutting down all the European sites that they're doing and then focusing on the U.S. sites, which is awesome. Massive cash reserves. As you know, they now hold $4.6 billion of cash and marketable securities, providing unmatched financial stability. Nobody's even close to GameStop on war chest as far as assets versus liabilities. They are literally, I believe it was 5-1 on a current ratio. Companies don't operate 5-1, certainly not brick and mortar. So that's pretty awesome. Positive gross profit margins. Yes, they increased gross profit margins almost 300 basis points. They went from 26.1% all the way to 29.9%. Almost 30% gross profit margin. I was looking for 27. I was looking for 1% more. No, 3% more. And the reason for that, because they're selling higher priced items with greater profit margins. And that's collectibles. That's PSA graded cards. That's where you want to be on GameStop. So there's that. There's a debt-free mindset. With minimal debt and strong cash reserves, GameStop is financially agile. The competition or the completion of the $400 million equity offering shows you that they can further strengthen their sheet, in which that's what they did. Okay, focus on transformation. GameStop's lean operations, a commitment to investing in digital collectibles and and that's a comma there. Digital, comma, collectibles, comma, and other profitable categories reflect forward-looking strategy. The company has repeatedly demonstrated its ability to adapt to changing retail dynamics. Yeah, they're forever adapting. They're forever surviving. I just think this is a really fun company to run. For the guys at the helm, I think they learned it's not about dog food, bags of dog food, canned dog food, and kitty litter. This is a forever changing company. You have to know the cards you want to buy. You have to know what's hot, what's not, what games people want to buy, what are the packs people want to buy. You have to be up on it, and it's all now. They want it now, and they only want it for the day. They only want it for the quarter, for the week. So you got to make your money when you can, and GameStop's capitalizing on a lot of that. There's still plenty of money to go around, as in for capture. And I'll give you this example. Have you gone to a GameStop and they're sold out of your favorite sports cards you want to buy, or they're sold out of Pokemon cards? Happens every damn time because they don't have enough. The demand is beyond what anything they could carry at the moment. That's why I think the growth is there. The growth, the possibility is there. It's not an oversaturated item yet, but with the growth of people and the new customers that they're bringing in with it, that's where you come. That's where the maximizing the growth goes. But we'll get there soon enough. It's going to be fun to watch. It's going to be fun to be a part of this run. And shareholder confidence. With no further equity offerings planned for this fiscal year, GameStop reassures shareholders about its commitment to responsible financial decisions and sustainable growth, meaning they're not trying to dilute you guys, okay? They understand that you guys want to have growth within the company. This is why I feel they have enough cash to do share buybacks. They have enough cash to pop out dividends. And these are things that sustain growth or keep you diamond-handed. But this is how you reward your shareholders with the profits coming to this company. They're going to have $150 million profit, but we'll see how it all works out. More than that. They're going to have even more than that, but we'll talk about it in a minute. So let's go ahead and realize a couple of these things here. Significant cash reserves. Yes, GameStop reported having 4.6, which is fine. Streamlined operations. The company has taken the steps to optimize its international operations by exiting underperforming markets like Ireland, like Switzerland, and Australia. Or Austria, I apologize, and planning closures in Germany. These moves are aimed at reducing costs and improving profitability, as well as Italy, right? And they already closed down Ireland. Like, they know where they're going to make their money. They just have to make the moves to do it, and they don't do it all at once. It's not like they just go cold turkey. They take their time in doing it. They obviously want to exit these in the first quarter of next year. They want that holiday dollar. They want that Christmas dollar right now, and they want that Thanksgiving dollar right here domestically. I don't know what's going on internationally. Maybe they know their markets better than us. The focus is on collectibles and high margin products. GameStop's shift towards higher margin categories like collectibles has yielding results. Collectibles represented a growth share of total net sales, contributing positively to the gross profit margins. I told you. And it's going to get all the way up to around 35%. I know we're at 29 now, but as it gets adopted and as people keep coming through, it's going to get even higher. I promise. Strong investment strategy under the guidance, because you got to also remember this, guys. This quarter, that SG&A number includes training, software, everything you need for the PSA announcement. That PSA, to get ahead of it, to train everyone to implement the software, and all the iPads they got to buy, everything they got to do to get all the stores in line, that's an expense, and that's a one-time expense. That's why adjusted EBITDA comes into play for GameStop. It's going to be awesome, guys. If you stick with it year after year after year, you might have to pay for the infrastructure, you might have to pay for the training. But after a year, after 2 years, after 3 years, after 4, it just gets grandfathered in where you're beating it. Or you're going to be paying for something new next year. You're going to pay for a new training that's already penciled in on the budget, and we annualize on that number. I'm just letting you know how it works, guys. It's going to go great. This business is run the right way. They're doing it the right way. Strong investment strategy. Under the guidance of Ryan Cohen, GameStop has implemented a robust investment policy. With an investment committee directing portfolio activities in public and private markets, this strategy is designed to generate returns from cash reserves. That's that $58 million. $58 million right now. Can you imagine what's going to happen when they get really aggressive at the right times? See, this is not the time to get aggressive. This is an easy yield. This is easy. You're buying fixed assets. You wait. You wait till they get aggressive on something when the market fumbles. When this market retracts, you're going to see investment activities go up 200, 300, 400, $500 million in one random quarter. It's going to happen. They are going to find the time to invest into something that's going to net them a profit, a massive profit. They'll know when to take the chance. Or they just might hire a guy named Roaring Kitty who knows how to really maximize profits. That's what I would do if I'm GameStop. But hey, I'm just one guy. Let me go back to it. Operational efficiency. God, I get too excited. I'm sorry. I get too excited. It tells you here that GameStop has reduced SG&A expenses by cutting labor, consulting, and marketing, as well as store closures. This effort aligns with the company's goal of achieving sustained profitability. Yes, they're doing it the right way. And lastly, partnerships with PSA. Collaborating with PSA to offer autograph authentication and grading services has positioned GameStop to attract a new customer base in the graded collectible market. All of these are highlights from the earnings report itself. just know GameStop showed profitability, they showed growth, and they showed transition. It's coming. It's going to keep happening for you guys year after year after year. But they are positioning themselves to be able to pounce, for the lack of a better term. They are positioning themselves to really destroy that bearish narrative that GameStop is over and done and they don't stand a chance. They're just positive. They're uberly positive. And by next quarter, by March of next year, when they announce their quarterly results, you should be in the $40 price range. But like I showed you on other investments, guys, today on the live stream I showed it. You don't get into the S&P 500 until you show a profit. Until you show an annual profit, trailing 12 profit, they won't put you there. No matter your market cap. GameStop already has the profit. Now they just need the market cap. And I know how to get it. It's called Diamond Hands. I don't sell, and I'm going to be okay. I'll see you guys around, but I'm up. I'm green, and I'm going to be green forever. That's the way it looks. Believe it. GameStop. Can't stop, won't stop GameStop. I'm going to see you around, millionaires. Peace.